So I thought we'd start with this quarterly chart of gold. We're back close at all-time highs. The dollar has only fallen slightly. Stocks have fallen more. But nonetheless, gold is near its all-time highs again. Silver isn't, but gold is. We are above the high of more than a decade ago. 12 years ago almost, gold reached a high price of $1,915 per ounce, and then it retraced down to $1,000 per ounce, more or less, $1,050. So nearly a halving, and that was from a basing in the, can you believe that, the 290, 300 area that lasted for years in the late 90s and early 2000s. And then just the most monstrous run-up, a decade-long run-up. And now, a decade of stagnation. That includes a 50% drop, but then a big rise. We're within the price range of April to July, so the spring and summer quarters of 2020. We're still in that sort of broad area. From here to here, we're in here. If my rectangle tool worked, it would show you that. We're in this box. We're in this box here. And we're near the all-time highs. And I suppose we're going to have to look at this in conjunction with the dollar and some other charts. But I wouldn't be surprised to see a break out to the upside. I think on the quarterly, you can see here the trend line on the rooftop here of RSI, back tested here, only in the summer of last year, only 2 quarters ago, and likewise the huge positive reversal setting up from July 2018, the quarter beginning, to July, October, the quarter's beginning, 2022. And we may pull back a bit because we're coming into highs, all-time highs. But the overall picture for me, this is what you see for bullish price action. A quarter's a long time, of course. If you're going to live to be 1,000, you might trade the quarterly chart. Good luck with that. Let's duplicate a yearly line. Oh, look at that. There it is on the yearly. Beautiful. Can we run this right through the middle? Not quite. No, not quite. We'll put that there. So I'm biased towards up and out. I'm biased to up and away. But again, that's a few candles on here is a few years of your life, folks. So let's go down to the monthly. See, that's out of date. I was expecting this to become a negative divergence, but the closing high was never higher than this closing high. There's the dip down, both to the mid-range of this triangle, the mid-level, and also to this diagonal, this line of angle that fit on the very long-term charts, this one coming off a yearly, and is a duplicate of this line and a duplicate of this line. So, useful lines of angle. So we're back up testing the area we tested in the summer of 2020, and then again in the spring of last year, and we're here again for the 3rd time. What's going to happen? Let's have a look at the weekly. Yeah, I know. Sort of the doji, you got sold up here, but it got bought up here. They couldn't quite close it higher. Negative divergences. You know, it's quite possible now we've nicked this, we can roll back over. Well, we keep hitting up against this level over and over again. So, either the range mode will continue, we'll roll over, sell down, or we're in breakout mode. And really we're going to have to look at other assets to get a better idea, I think. So why don't we look at the enemy? Well, not the enemy, but you know, the counterpart. Here's the dollar. There it is. Dollar quarterly. So we spiked up into here, this distribution area here, from 20 years ago, and we've dropped like a fucking stone in 2 big candles since then. We closed up a little bit. But I don't think it looks good. I think insofar as we're under, what's that, 102.77? Oh no, ignore that. 105.7 to 106.9, something like that. It looks like further downside to me. It looks like this is, you know, back testing these areas and falling away from them. And these were your old highs. We got this quick move above it, and it wasn't long lived, and it's just tanked out and dumped out again. So this quick move being also quick on the up, quick on the down, quickly erased. So let's have a look at silver, which has not moved as much, not even close, but the monthly chart still looks very good. We're at resistance, but we poked down into support in the sort of 1819s levels. Wicks down, top became a bottom, powerful move up, straight into resistance on the monthly. Should have started with the quarterly, I suppose, to be in keeping with everything else. It got eaten up, this wick got eaten up, but it can't go back into it really. You don't want to see it getting pushed back down. You want to see it closing above this 23.30 level. So to the monthly, we're going to the weekly. There was the pivot we came into and tested, gave it a little poke, and up we have come. And very nicely too. We didn't quite reach into this doji here on the weekly, that weekly doji. But it doesn't matter because, you know, this is lovely action we've got here. And you can see we've entered into resistance, not only long-term resistance, long-term pivot point, but also it's these weeks, these 1, 2, 3, 4, 5, 6, 7, 8, 2 months of distribution back here in the winter. And there it is on the daily. Lots of back testing kind of look to it. But our context being, this is on this time frame you wouldn't be buying, but if you went down and lower, I mean, they could have bought this. You know, buying on lower time frames if your overall context is still anticipating an up move. This downwards channeling action here into support, and then off it goes. Positive divergences. You get the whole shebang. You know, we're not somewhere where you'd be getting in big on the buy side because of, you know, we've just gone into this 2 months of sell side selling distribution. The dollar looks bad. Gold is near its all-time highs, but it doesn't look bad. Other than that, I mean, you should sell at highs is what they say, and it's normally true because most of the time price is in a range, but it doesn't look bad. And if we look at, should we be buying or selling these precious metals? Well, let's take a little look. Well, according to this, gold miners against gold, the ratio's above the 14. It's positively crossed over on momentum. We should be buying gold. What about tip shy? What about real rates? Well, this has been crap as an indicator for a while. I mean, what's there to say? It's inflation against real rates. So, and I guess this is, if I reversed it, maybe this is measuring. Anyway, when this goes down, silver should go up. But I mean, it's a mess. Silver against stocks, it's above the 14. There's no signs of like divergence or anything like that, but there were positive divergences that's low. So silver's on buy. And silver against gold, silver showing disproportionate strength, it's over the 14. Histogram built up this positive divergence alongside here at the low. and we've moved up. So yeah, there's still plenty of reasons. Being systematic and following a system, following the weight of evidence to be trying to maintain and establish longs in precious metals on an appropriate time frame. Yen against the dollar. It looks like a head left shoulder, right shoulder to me. The neckline would be somewhere up here, so maybe we'll come and challenge the neckline. I don't know. There's silver on the daily. Let's look at the 6 hour. You can see there was this wedging action here on RSI, and it's broken out, and it's wiggling around above it. And you can see as much as RSI was coming down, price was going up, shooting up, ranging slightly, shooting up, ranging slightly, shooting up, and now this upwards channeling. Potentially not a good look. Potentially not a good look. You know, this sort of... Oh, that's terrible drawings by me there. There we go. That sort of upwards channeling can be very bearish. That channeling into resistance, then it can dump. The opposite of this, basically, you've got this downwards channeling. You know, it becomes gentler, choppier. The lows become less ferocious, and then, you know, it turns around. Can we make an argument for a sort of a wedging action? Let's have a look. Wish I would stop trying to guess what I'm trying to draw and just draw what I want it to draw, but that's computer programs. Yeah. So I'm in the short term. It looks potentially a bit overextended, like it might pull back. Something like that. Wedging action at resistance after a huge week up, after a huge month up. But systematically, in terms of the system, and following, you know, thinking less and following more, following basic logic of what we're looking at more, I'm not going to be selling into this. The stops in my long positions I took, you know, further down here. I don't know exactly where, but I've got some nice long positions scattered around all the way in this move. You know, I've moved my stops up quite high. So if I do get taken out on a retrace, I'll make a good chunk. And then it's just a matter of, you know, saying what the system is telling me, and more slowly and more quickly getting back in as appropriate, if that should happen. You know, in and out, in and out. That's the way it goes. We'll see. It could keep going. It could keep going. It could go up, it could go down. Wisdom for the ages there. Euro. It's reclaimed. I mean, this was the floor before. This is a look. It's a long time horizontal level. It even is the level. Slurring my words. I've been sick for. I think I've caught some sort of a brain-eating virus. I've been sick for like 10 days now. I'm slowly getting better, but I probably sound slightly bunged up, and I feel like I'm slurring my words and they're not quite coming out right. Maybe I've had COVID again and it's finally damaged my brain, like they said it would. Well, you can see it acting as a low. It's a perfect pivot here. This low comes close. It's the centre of this triangle here, and then ding, 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 ding. It keeps getting hit here, and we bounced up off it a little bit. Quite why the euro would be appreciating so much against the dollar, I don't know. The future of Europe as a whole doesn't look very good. Let's face it. No, neither does America. But there you go. Maybe that's the only thing that matters, is the relative declines of the old world and the new world. Semiconductors, divergences popping out. Not so much on price volume trend momentum. We're testing this rooftop on the from above. Either we're going to sort of, you know, not more than poke and prod into it a little bit before resuming to the upside, or it's going to be worse and we're going to resume to the downside on the 4 hourly. Yet we avoid closing lower than this low. I'm just putting a small positive reversal here. Positive reversal here. Well, what about stocks? What about stocks? They staged a little bit of a recovery. It's at an important resistance, like right now. You can see this level just by following the dotted line of where price is. You can see that's been a super important pivot, 39.80. So let's see what the internals say. So, cumulative advancing declining issues on the New York Stock Exchange. Consolidating, I suppose. Price has been going up. Looks like it's trying to stage something of a recovery. But we're still, I mean, overall the histogram is firmly ensconced below zero. And the black line is clearly under the red on MACD. We're below the 14, so I can't call that a long signal. Same here. You know, price has gone higher. This is slightly making higher lows, but it was still declining quite dramatically. We've not got a crossover on momentum. We're below zero. So even though, you know, what's the Nasdaq looking like? You know, it looks quite good. There's your positive divergence. You know, so even though on the price chart it's not looking terrible, in terms of systematically looking at the signals, it's not saying to buy. Same here. We're below zero. We pushed deep down to minus 600 on the NAHL for the Nasdaq, and that's not the kind of thing you really see in bull markets. It's consistent with this bearish look. We briefly managed to make it over the zero line, and also this sort of red fake out false signal line for a rally of sort of, you know, 2,000 points or whatever, but it's back below zero. It's not looking good. There's that same kind of weird look where price is sort of, this is squiggling around. It's diverging slightly, but not really, because price is going up. So it's following price sort of, but it's coiling. And is this for an explosive move, or is this, you know, preparing for more downside? With histograms just crossed above zero, we've just got an MACD cross. So negative, 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 negative neutral. Yeah. Crude. Crude looks terrible. Still. Here's Brent. The argument could be made that we're backtesting this area again. Maybe we'll come down to 40-50 range. I don't know. More people coming disabled, more boomers retiring, more VACCINE injuries. Going to bearing down on demand, one would think, and economic activity. Oh, it doesn't look good, does it? It would need to get back over 76.05, I think, to flip long. That's Brent. Is there anything else worth looking at? Treasury bonds. So rising real rates, falling real rates. It can't make its mind up. It's back at the highs. There was your positive divergence down here. So I suppose was that like your long metal signal. Again, sort of, is it flagging out on RSI? Is that a momentum flag out? it's not in the cosiest spot for making a decision either way. I don't think. Rather like the indices themselves. I think where things closed in general on Friday is not the ideal spot to begin. Probably best to let price action unfold somewhat more before trying to jump in any direction. Natural gas. Let's look at the monthly. Maybe it's going to come down lower. I mean, this rejection here off of let's get rid of this. This black line here. These monthly downward trend lines here. Maybe we need to get under this low. Maybe we're going to come into sort of again the 250, 290, 250, 1880. I mean, sell granny time. Sell granny time. If we break this low, it's sell granny time and buy natural gas. It really is. High yields. Just chopping around. Nothing leaping out at the eye there. Uranium. This has disappointed a lot of people. And I would say, myself included, I was briefly trying to get long uranium in the belief that this was going to be the big uranium bull market. They'll have to go nuclear. They'll have no choice but to go nuclear. Then, we'll all be squillionaires from going long uranium. It's not worked out that way, and we've come back up to this resistance level at 2360, 2370, and we've just tanked out. We've absolutely tanked out back into this low. Yeah, I mean, could be a bit of divergence coming in. The monthly, that's a sick puppy. It would need to get back over 2010. 2020, I think. Or reverse basically immediately upon opening, and this would have to be the low, it's 1858, to consider going long. Actually, I would absolutely pump that long and just have a stop down here. The risk reward is actually pretty good on that. There's a punt. I definitely would, actually. That's about it. Agriculturals. And we had 1 year of global catastrophe in food production. We've had a crappy winter in Europe. Apparently all like the lettuces and tomatoes and things have been ruined, and I don't know why there was suddenly a shortage of tomatoes. It's completely the wrong season for tomatoes, even like Mediterranean producers. I mean, are the polytons that good these days? I don't know, but they were frightening us with expensive lettuces and expensive tomatoes, and it was chaos in the streets of England. And it's China's having all sorts of droughts apparently right now, and record-breaking temperatures after sort of like winter droughts and winter warmth. I mean, who knows if food production is going to be fucked or not. But there is your positive divergence at these lows. We're still very close to those lows. This is a big bar, and that would look huge on an intraday chart, but in the big scheme of things, if this is the start of a move, we could at least be coming back up to these range highs. You could get a decent move out of that. I guess you don't want it to fall below 1982. Then that would indicate this was just a little spike, and now we're going back down, and we'll test lows further. Down here, in the 1930s and 40s. And I think that just about rounds it all up. So, that's that.